Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two strong buy stocks that just recently hit the market. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies that just recently had their IPOs, hitting the public markets in the month of April, and already they have picked up a strong buy consensus from Wall Street analysts. So today we're going to take a look at these companies, what it is that they do, and how optimistic these Wall Street analysts are feeling about the stock's future. Just before we get into these stocks, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's take a look at these two strong buy IPO stocks. First on our list today is a company called PACS Group. They trade under the ticker PACS, currently priced at $24.50 per share. They just IPO'd back on April 11th at $23 per share, realizing $450 million in gross proceeds from the offering. The stock has gained a couple percent since then. Founded back in 2013, PACS Group operates in the skilled nursing care niche. They are a leader in this field, specializing in the provision of high-quality post-acute skilled care and working as a holding company with a network of independently operated facilities. Their network is spread across 9 states with nearly 220 post-acute facilities, employing more than 32,000 people. They have 200-plus inpatient facilities and offer ancillary and support services. The company is scheduled to release their first ever quarterly report as a publicly traded company today in the after hours of May 13th. And following that first quarter release, management will be hosting a call the following day on May 14th. Of course, these reports are typically a catalyst for analysts to update or reiterate their ratings on the stock, so we'll see how Wall Street reacts following the report tonight. But ahead of this earnings report, we've already have 6 analysts who've weighed in on the PACS Group stock, one of them being a 5-star analyst from Stephens. They said that their buy rating is based on the anticipated robust growth and strategic operations of PACS Group. The firm operates a large network of skilled nursing facilities and has a strong track record of growing its business through mergers and acquisitions. They also point out that PACS trades at a discount relative to its core peer, suggesting room for multiple expansion as the company continues to enhance its fundamentals. Also weighing in was an analyst from JP Morgan. With the buy rating, that analyst notes that they appreciate their significant market presence in a highly fragmented industry, which indicates substantial room for further expansion and market share gains. They project a consistent demand for their facilities, driven by an aging population and limited development of new sites. With those 6 current analyst ratings, we do have a unanimous strong buy, and an average price target of $30.50 for an upside potential of 24%. Looking down below at our recent ratings here, several coming in at that 25%, a low-end price target from JP Morgan with an upside of over 9%, and 2 high-end price targets just shy of 30% upside. The second stock we're taking a look at today is UL Solutions. They trade under the ticker ULS, currently priced at $36.76 per share. They hit the public markets on April 14th, selling nearly 34 million shares at $28 each, raising approximately $946 million in gross proceeds. UL Solutions works in the safety science niche. They work with customers in more than 110 countries, offering solutions for safety, security, and sustainability. Some of their specific services include product and systems testing, inspections, and certification to help support customers in their business and innovation endeavors. Their standards are used in a wide range of inspection regimes for products as varied as electronics, life safety devices, plastic materials, and industrial control equipment. They'll be sharing their first quarterly report as a publicly traded company in a week's time on May 20th. But even ahead of that earnings report, we already have 11 Wall Street analysts weighing in. One of those being a 5-star analyst from Robert Baird. They gave their buy rating on the stock, saying that they have an impressive standing in the robust and expanding product testing, inspection, and compliance markets. They said that UL's deep-seated brand strength and technical reputation in turn supports the company's ability to impose premium pricing. Also initiating coverage on the stock was a 5-star analyst from Jefferies. The analyst gave the stock a buy rating, saying that they were optimistic about UL's prospects, noting their status as the largest player in the TIC market, which is being driven by global trends such as the transition to renewable energy, the adoption of EVs, and the proliferation of new products requiring testing services. From those 11 current analyst ratings, the UL Solutions stock does come in as a strong buy with 9 buy ratings and 2 holds. and the average price target comes in at $40.30 for an upside of about 9.6%. Looking at our list here down below, several 5-star analysts weighing in. Our low-end price target is our hold here with an upside of about 3.4%. And then we have a few on their high-end price target at $42 for an upside of over 14%. So that is a quick look at 2 stocks that are coming in as a strong buy shortly after their IPO. Let me know your thoughts on these companies in the comments down below and whether they were on your radar or not. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan and do your own research and due diligence. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.